As we welcome 2024, are we about to see a seismic shift in the financial landscape?
In today's video, we're diving deep into the collapse of Silvergate Bank and its impact on cryptocurrencies, with insights from the brilliant Nick Carter.
And you won't want to miss George Tung's take on Bitcoin's upcoming challenges and opportunities.
Stick around as we summarize the most crucial insights that can shape your investment strategies in 2024.
Welcome to Financial Insights in Minutes, where we break down complex financial information into digestible insights.
And don't forget to stay tuned for exciting updates on how China's economic strategies affect Bitcoin.
Anchors away as we dive into a twisty tale. What really went down during the collapse of Silvergate Bank?
Here's the scoop. Insights from Nick Carter reveal that Silvergate might have been a victim rather than a villain.
Sounds like we've got ourselves a rabbit hole to explore. What clues are dropping from Carter? What's the core thesis behind this banking saga?
Carter argues that Silvergate's downfall was orchestrated via regulatory tactics aimed at debanking crypto, likening it to Operation Choke Point from the Obama era.
Let's break this down. Silvergate was once a crypto titan. What statistics do we have?
At its peak, it held an astounding $11 billion in deposits, but then came the FTX fallout, resulting in a $1 billion loss.
So what exactly is Operation Choke Point 2.0?
It's a regulatory push aimed at cutting off crypto's access to banking, mirroring tactics used against firearms.
The plot thickens. What was the decisive moment for Silvergate?
Insiders claim that the decision to liquidate wasn't just due to business woes, it was regulatory pressure pushing the narrative along.
Time for predictions. What's next for crypto-friendly banks?
The disappearance of such banks could lead to increased hurdles for crypto firms. Will we see regulations soften if crypto trends improve?
And how might political shifts affect crypto regulation?
With the upcoming elections, the regulatory environment could undergo significant changes, determining whether the crypto industry can thrive.
To wrap things up, what can we take away from Silvergate's fall?
Definitely a cautionary tale. It underscores the need for transparent and fair regulations to protect the future of crypto.
But wait, there's more. Up next, we'll dive into a huge moment coming up for Bitcoin, featuring insights from the brilliant George Tung.
You won't want to miss this. Stay tuned as we unravel what lies ahead for Bitcoin.
Anchors away as we navigate through Bitcoin's turbulent waters. A huge moment is approaching for Bitcoin. Let's dissect what it all means.
Here's the scoop. George Tung dives into recent market dynamics, revealing crucial factors that could significantly shift Bitcoin's trajectory.
And just how stormy could this ride get? Let's set sail and find out. What's the major thesis of today's discussion?
Bitcoin's future is being shaped by external pressures, like economic data and natural disasters, alongside ongoing trader sentiment. We need to understand how these elements combine.
Let's dive into those key points. Starting with the market conditions, how's Bitcoin faring?
Bitcoin is off to a weak start, while altcoins took a beating overnight. Economic announcements could be the jolt this market needs.
Now, what about that hurricane? What's the deal?
Hurricane Milton is a Category 5 storm, and its potential impact could ripple through the economy, disrupting not just Florida, but all markets if the damages are severe.
What does the DXY tell us right now?
The DXY is on an upswing, which usually indicates fear in the markets and can lead to weakened positions in Bitcoin as traders flock to safer assets.
What predictions are on the horizon?
Looking ahead, the upcoming elections and potential interest rate cuts could be pivotal. Additionally, the ongoing liquidity in stablecoins hints at bullish momentum returning.
So what do experts predict regarding natural calamities and their impact?
Natural disasters could toss the market into volatility, affecting recovery timelines and investor confidence. The aftermath could be just as crucial as the event itself.
And what's the word on institutional interest?
Institutions are showing sustained interest in Bitcoin, with significant fund inflows indicating a beneficial shift for Bitcoin's long-term price targets. The market is gearing up for renewed strength.
Bringing it all together, what do we need to remember?
The interplay of external pressures, such as economic data, natural disasters, and evolving market sentiment, will shape the path ahead for Bitcoin. The storm may be here, but calm waters may follow.
But wait, there's more. Up next, we'll take a look at insights from industry experts on massive changes in the Bitcoin landscape.
That's right, don't miss the next segment featuring Tom and Bob Lucas from Altcoin Daily. Their insights are bound to catch your attention.
Let's dive right in. China is like the final boss for all-time highs in crypto markets, shaping up to be a game changer.
Here's the scoop. Expert Tom reveals his insights on the macro landscape, and it seems the crypto markets just experienced a big shift.
Surf's up. What are the expectations for the US economy, and how does that tie back to Bitcoin's future? So what's the central thesis here? How does China affect our beloved Bitcoin?
The crux is that China's economic strategies, especially the expansion of their M1 money supply, are poised to pump Bitcoin prices, setting the stage for all-time highs by the end of the year.
All right, what's shaking in the US economy?
Tom predicts a strong stock performance, with the S&P likely holding steady around 5,700, fueled by rate cuts and positive economic indicators.
Now, what's happening with Bitcoin?
Bob Lucas highlights an exciting setup. Bitcoin's longest period of consolidation might just be the calm before a massive bullish storm.
Let's navigate through those price predictions.
Jeff Kendrick from Standard Chartered projects Bitcoin could hit fresh all-time highs, $125,000 if Trump wins, and $75,000 under a Harris victory.
So how does China come into play?
China's accommodative policies are viewed as key to stimulating domestic demand, which could positively impact Bitcoin, driving prices higher.
And what about global liquidity?
The liquidity cycle has picked up since late 2022, laying the groundwork for Bitcoin to potentially eclipse previous all-time highs.
To wrap it all up, what should we keep in mind?
As global monetary policies evolve, Bitcoin could see unprecedented heights, especially with China's role in these shifting dynamics.
What's next for our eager viewers?
Coming up, intriguing insights from Lark Davis on Bitcoin exposed by this charking. You won't want to miss it.
Anchors away as we dive into Bitcoin's potential. Could this chart reveal a bright future for crypto?
Let's get straight to the facts. Lark highlights the impressive recovery cycles of Bitcoin after halvings. Looking forward to exciting times ahead.
What an exciting ride. But is that optimism backed by solid data? What's the main takeaway from Lark's insights?
The core thesis here is that Bitcoin's historical performance post-halving suggests we're set up for a major rally in the near future as market conditions begin to align.
Let's break down those key points, starting with historical price cycles.
Absolutely. Each halving in 2012, 2016, and 2020 led to massive price increases. This year's data suggests we could follow a similar trajectory.
And what about the broader market conditions?
Lark notes a thriving economic environment, increasing global liquidity, and better job data signal that Bitcoin might be ready for a significant upward move.
And what's this about the MACD bull cross?
Exactly. A confirmed MACD bull cross on the weekly charts could be a strong signal that a rally is imminent, setting the stage for possible all-time highs.
So what does Lark predict is coming for Bitcoin?
He believes a significant rally is on the horizon, as historical performance post-halving aligns beautifully with today's market sentiment.
And what about the world of crypto gaming?
Lark's optimistic about the potential for new gaming titles to drive interest back into the sector. The landscape is ripe for a major revival.
Wrapping it up, what are the key takeaways here?
Understanding Bitcoin's historical price patterns gives us insight into the potential recovery ahead. With the right market conditions, we could be on the brink of something big.
Future strategies should focus on capitalizing on Bitcoin's upward momentum.
Absolutely. Staying informed and agile is key to navigating the shifting tides of the crypto market.
But hold your horses. Next up, insights from Rand Neuner on 79.3% of crypto investors will get shaken out. This happens next.
You won't want to miss what Rand has to share. Stay tuned.
Time to navigate through these waters. Are crypto investors about to get shaken out?
Here's the scoop. With the market limping along and volatility at an all-time high, anticipation for the CPI inflation report is palpable.
Even the charts are holding their breath. What could happen next in this crypto roller coaster? So what's driving this thesis? What can we expect following the CPI results?
The core idea is simple. With high volatility and pressure building, A potential shakeout could see up to 79.3% of crypto traders selling off if market conditions worsen.
Diving deeper, what's the real state of the market?
Market volatility is a ticking time bomb. Chinese stocks recently plunged by almost 6%. This turbulence can rattle even the most seasoned investors.
And that critical 21 EMA, what's its secret?
That line holds the key to potential market movement. If Bitcoin can stay above it, there's a chance we could see a bounce back as trading activity stabilizes.
What about the upcoming CPI release? Can we predict the outcome?
The CPI data could send ripple effects throughout the market. Depending on how favorable or unfavorable it turns out, significant price shifts are expected.
Looking into the crystal ball, what predictions can we make?
First up, a bear trap could ensnare many investors. Expect a strong rally when retail confidence resurfaces post-CPI announcement.
What else should we consider?
Volatility will likely escalate after the release of CPI figures. New dynamics could reshape the market rapidly.
So wrapping it all up, what should investors take away?
Be ready for anything. The anticipation surrounding economic data like CPI could lead to unique opportunities or shakeouts.
If you're finding value in these time-saving summaries, like and subscribe so you won't miss future updates.
Your support helps us keep bringing you insights that matter most.
As we wrap up today's engaging discussion, we've gained insights from a range of experts, starting with Nick Carter, who highlighted the serious regulatory implications stemming from Silvergate's unfortunate collapse.
That's right. And George Tung has optimistically forecasted Bitcoin reaching between $75,000 and $125,000, depending on political outcomes.
Plus, we learned from Tom and Bob Lucas about how China's economic maneuvers could be a game changer for the crypto markets.
But it seems there are varying opinions on volatility, with Rand Neuner advising caution amidst the excitement.
Thank you for tuning in. Don't forget to like and subscribe to Financial Insights in Minutes to keep receiving invaluable financial content as we navigate these turbulent economic waters together.
And remember, there's a wealth of knowledge in our other videos, so feel free to explore more.